Hi there, traders. This is Brad Gilbert with the FX Market Insight for the 30th of August. All right, now as we come into the Asian session, there's some pretty muted moves on some of these major currency pairs. The Aussie and Kiwi just continuing to just grind sideways. The interesting thing is the natural sort of correlation between the Aussie, Kiwi, Euro and Sterling is somewhat out of whack at the moment with individual events really affecting separate countries. Aussie and Kiwi, of course, connected to the Chinese yuan and what's going on there. The Euro just having a pretty steady time of it with no major economic numbers and just a bit of fluctuation in the strength of the US dollar. So it's steadily going to the top side. Now, the big overall mover, if you can't see it, well, it's clear as day. Sterling, okay, up about 150, 160 points on the day. It probably does it for the moment, but this is on the back of some really positive Brexit news. One of the EU's chief Brexit negotiator has given them a few options, and it's a very positive sign. And you can see how much Brexit was weighing on sterling. I'll show you the yen crosses in a minute. Sterling yen went a little bit ballistic. Now, dollar CAD, we've got variations in oil supply from OPEC. We've also got Trump and Trudeau trying to work out a NAFTA agreement there as well. And overall, I still think there's a sort of hawkish sentiment from the Bank of Canada. So a lot of variables in there. So dollar CAD trading a little bit sort of choppy sideways in a pretty decent range. Dollar yen, I think, was dragged along by more like sterling yen than anything else. Right? There hasn't been a lot of dollar strength across the board. So you're trying to work out where things are. Now, obviously, the first thing you would do is just go in and confirm why sterling is higher. And that's important because if something happens the reverse of what happened yesterday, then you know which way it's going to go. All right, so the rest of the currencies, as I said, Aussie, Kiwi sideways and Euro just on a steady path to the top side. All right, so let me just flick over the screens. And first of all, let's just have a look at what the US dollar is doing. Now, with a lot of the news services too, they will write a lot of rubbish just to sort of fit the bill. If you ever look at the dollar index, okay, it has been sort of just drifting lower the last couple of weeks, but if anything this week, it's sort of up and down. It's a little bit sideways. So don't get distracted and think the US dollar is falling significantly. We have had some, I think, pretty steady economic numbers, and the US dollar is not rallying. And we know that's a bit of a situation with all the talk about the yield curve, etc., suggesting there's an upcoming recession. This puppy here, over here, the dollar yuan, right, starting to claw back. Now, I mentioned yesterday the PBOC, they came in and intervened in the market. Stealth pushed it, bought yuan, pushed the dollar yuan down. That sort of cleaned out a lot of the speculators. You can see now they're starting to get back in the market softly to start with. And now you can see they're starting to feel a bit more confident holding dollar long positions against the yuan. So, and there's talk also, if I just come back over to the main news, that the main reason for that move higher is the fact that the dollar's going to rally because there's no sort of significant change in the trade deal with China. So advances versus most currencies as trade deal optimism eases. It's like, what the hell's going on there? So just focus on the core events. Now, you've got to be aware, dollar CAD, okay, the Canadian dollar is very influenced by these upcoming NAFTA discussions. That is first and foremost. There's also, if you go through the various news services, you'll find there's various things about OPEC. They're talking about increasing supply. Iran's getting shut out of the market and what impact that's going to have. So oil, not exactly sure about what's going on. I wouldn't be surprised to see them try and screw the US refineries. And that's actually push oil down, but we'll see how that one plays out. Now, the big news, as I mentioned, was on sterling. EU's Barnier, right? So this guy here is the chief Brexit negotiator for the EU. He has come in with a bit of an accommodative stance. He's actually offered a couple of different models they could use. So that's a breath of fresh air, right? And that's the first time that EU's sort of thrown them an olive branch, and that's why sterling's gone through the roof. A lot of short positions on the back of no deal going into March, and that's pretty much screwed them up. Now, this doesn't mean there's a deal. It just means that they're happily going to sort of accommodate them by the looks of things. And up the top here, Trump and Trudeau upbeat about prospects for NAFTA. Yeah, I don't think Trudeau's upbeat about what Trump can give, but we'll see how that plays out. But that's just, to me, that's just media, right? That's just media sort of hype. All right, now so there wasn't a huge amount of data. The GDP numbers, US GDP numbers came out. Let me just change screens again. Back to the data. So if you come over here and have a look at the GDP numbers, okay, 4.2%, upbeat numbers, overall. And that's going to give you sort of a little bit of confidence. If anything, the pending sales change down the bottom there was a little bit. Where's my pen? Was a little bit sort of worse than expected. Okay, that puts a little bit of a tarnish on things. So the home sales index a little bit weaker. GDP estimate a little bit stronger. Once again, that should be dollar bullish, but there are other things going on here with the US dollar that I've mentioned before, and that's really coming back to when you do look at the overall news and the picture of what's going on, understand all the different variables that are impacting the market. As I mentioned yesterday, there's a lot of talk building around the US yield curve, okay, where they're talking about a flattening of the yield curve and a potential inversion, right? So an inversion generally suggests a recession, and that's pretty common sense because if you've got the long-dated, treasury bonds like the 10 years, giving you a lower yield than the 2 years or 5 years, well then clearly people think down the track things are going to go pear-shaped. So we'll see how this one plays out, but it is putting a bit of a tarnish on the overall gorgeous, strong fundamental picture the US has got at the moment. And that's where we are with that one. Now, just coming into the MyFX Trading Hub, for those that have been following it, now the main things to take out of today, there is still geopolitical events dominating the market. Now, that's not completely bad trading conditions, but you just have to be aware these things are random and can impact at any stage. So the Brexit thing, a classic example. I mean, the number of times I've looked for a break trade at the top side and got hammered on the Brexit news, and now months and months later it comes out with positive stuff, and there it goes. Now, so geopolitics dominating. So still okay trading conditions, but just understand there are still things that can come out at any stage. That's what I want you to be aware of. Upcoming events for today. Now, this is going to be a pretty interesting day across the board. We've got New Zealand and Australian data to kick things off for the Asian session. Then we've got the Canadian GDP numbers. Now, these may be overshadowed by these NAFTA talks. If anything comes out about NAFTA, the GDP numbers will be forgotten completely. So just understand that. And then you come into the PCE price index. Now, this is one of the key numbers or a favourable number that the Fed look at. It's another inflation number. Okay, so just make sure you keep an eye on that as well. We could see some sort of variance there. Anything to do with inflation is important. So they're your key releases for today. All right, so you need to be paying attention to these currencies because they will give you the potential direction that we're looking for. When you come back to looking for to match these things up, you're coming down to the daily analysis and really trying to work out and concentrate on the pairs that have clear direction. If anything, there's been no change. In the last couple of days, it may have been a bit of a surprise to a few, and I had a few people asking me, why are you bullish on sterling? Well, it was a fundamental issue. I mean, the inflation's very high, the economic numbers are high. Technically, it's been trading sideways. Now the technicals have kicked in bullish as well. So sterling has now got a real bee in its bonnet, and that's going up. Euro, technically bullish. I'm still sideways on the US dollar. I don't think it's really going down just yet, more than where it is. Dollar CAD, bearish. Dollar Swiss, you can just see down the bottom here, we had a technical trade pending on dollar Swiss. Now, we just missed the top of that, and it's like 70 points lower, 80 points lower. That's just something you got to bear with. I was looking for a rally back to the resistance line, didn't get it, but it doesn't change the perception. If you've got a general signal here, right, or a direction, and these are, this is my judgment. I'm looking for opportunities to get into these currencies, whether it's around economic numbers to give us extra direction or technical trade. So there's the four pairs I like. Now, for those members that do have access to those currencies, don't forget you can, simply click on the currency, and you will go to the analysis, the detailed analysis, to give you a lot more understanding around what's going on. Once again, the Swissy, just to highlight it again, I mean, this is, as I said yesterday, this is the clear dollar, the dollar trade. And what it's more of a reflection of what's going through the market at the moment. And technically, still weekly, daily, hourly charts, this thing is going down, and the rest of it's neutral. So to me, that's a really good pair. You may have missed it if you didn't get into that trade yesterday. You may have actually missed that opportunity. Now you have to wait for it to retrace because I can't really see any support levels at the moment. All right, so that's where we are, guys. So there's, just to give you a heads up, just to concentrate on the initial couple of releases, the Aussie and Kiwi, right, they're trading sideways at the moment. So there may be opportunities here around these releases, but they are short term. The US dollar, slight weakness, so maybe the top side's the go. If you are looking at the Kiwi numbers, okay, just understand this thing is illiquid at the best of times. And the RBNZ was highlighting the business confidence numbers as one of their key numbers to work out. So that they think business confidence numbers have been crap for about 6 months. And that is the biggest problem they can see at the moment. And if these numbers are really weak again, well, it's going to push the RBNZ into a potential cut rates dovish mode more so than what they are at the moment. So just keep an eye on that. The private capital expenditure numbers, important capex for the Aussie, but the Aussie's being dictated to, and the Kiwis to some extent, by the offshore yuan, the dollar yuan. So make sure you're keeping an eye on that because these numbers could be sidelined if you do see a significant move in the yuan. All right, guys, that's pretty much it. The rest of those numbers are pretty standard, stock standard. As I said, NAFTA may take out the GDP numbers, and Trump, always potential to screw up the natural flow of the US numbers. But it'll be interesting to see how the PCE price index comes out and see if that has any impact, either up or down at this stage. All right, guys, that's the FX Market Insight for today. If you have any questions, jump in the trade zone. I'm more than happy to help you out. Have a good trade day, and we'll see you tomorrow. Cheerio.